Dear viewers, Dr. Vijay's lectures on accounting number 19. Welcome. Here we are dealing with cash flow analysis direct method and cash flow analysis Sabu's firm for the month of January 2020 and comments on the basis of that. There is a promise that the answer for try by self problem given lecture number 18 will be given in the subsequent lecture, but I think it is the most relevant occasion to introduce cash flow analysis direct method. So the answer for that question will be given in further lecture. There was some delay in the uploading of this lecture purely due to certain personal reasons, and sorry for the delay. Thank you. Cash flow analysis is analysis of inflows and outflows of cash and cash equivalents through the till and bank account during the previous accounting period under operating, financial and investing activities of the firm. Analysis of inflows and outflows of cash and cash equivalents. Any forms of remittance through the till and bank account. In big institutions like banks, even treasury bills are also transferred like cash, and so that also comes under cash. The analysis is done during the previous accounting period. For the previous accounting period, the inflows and outflows during the previous accounting period is being studied, so it is historical in nature. The cash flow activities are classified into three: operating activities, financial activities, and investing activities. Under direct method, the inflows and outflows are identified based on the entries in the cash book and further relevant information. Inflows are identified from the debit side of the cash book and outflows from the credit side. Under indirect method, cash flows are located through reverse analysis of items in final account for the period and a balance sheet as on the end of the period compared to that of the previous period end. Under direct method, cash flow can be done only in a few small firms because analysis based on the entries in the cash book of a so many number of days is almost impossible. Operating activities, revenue earning activity of the firm. The area of business activity with which the firm identifies. For a trading firm, the operating activities is trading activities. For an energy supply firm, it is procurement, storing and distribution of energy. Even the basic activity, the expenses connected with purchases, production, other operational expenses, administration expenses, selling and marketing are all considered as part of operating activities. All the items that is considered in final account up to profit loss account is part of operating activities, revenue as well as expenditure. Financing activities makes changes in the size and composition of owners' capital and borrowings of the enterprise. It includes capital brought in, additional loans raised, withdrawals of owners and repayment of loans, payment of interest on loans, etc. In the case of companies, it includes proceeds of issue of shares and debentures, buyback of shares and redemption of debentures, payment of dividends of both on equity and preference shares, and payment of interest on debentures and bonds. In short, financing activities relate to the fundraising activities of the firm represented by the liability side of balance sheet. Investing activities are the acquisition and disposal of long-term assets and other investments other than cash equivalents. It includes cash payments and receipts from purchase and sale of fixed assets and investments, including intangibles as goodwill, patents, etc. Cash payments for purchase of shares, warrants and bonds for investments. Cash receipts from sale of such securities held otherwise than for dealing purposes. Cash advances and loans made to third parties other than by financial undertakings. For a financial undertaking, lending is operating activity. Cash receipts and payments relating to future contracts, forward contracts, option contracts, etc. For a broking firm, such deals done on behalf of customers are operating activities. In short, the investing activities reflect on the asset side of balance sheet. The three slides that follow gives information needed for doing cash flow statement of Sabu's firm for the month ending 31st January 2020. Slide 7 shows a cash book of Sabu's firm for the month. Slide 8 gives some relevant additional information on two things. A. Some errors and omissions occurred that necessitates correction in bank balance. Rectifying entries are already passed and posted, so only the changes required in the bank balance as per cash book need to be noticed. And B. Some errors demanding changes in the nature of activity than what can be known from the cash book. Some activities, even though it looks like investing activity, it is actually financing activity, like that. And slide 9 is the extended cash book in which the required changes are done. So please go through the three slides carefully. See the cash book of Sabu's firm for January 2020. In the debit side, opening balance, cash 6,000, bank 12,000. Now see the entries in the debit side. It is all inflows. Need not consider contra entries. Let us see whether each cash flow is from operating or financing or investing activity. First is to sales, cash collection from sales, $78,000. No doubt it is from operating activity. Now, January 12 to capital 20,000, additional capital brought in by Sabu. It is financing activity, inflow from financing activity. Next is roll-ins, 19,000 cash column, 300 discount column. Ignore discount column. We need to consider only cash flows. It is for sale of goods to roll in, collection from receivables, operating activity. Then Miranda 21,500. Again, collection from receivables. It is cash flow from operating activity. Below that comes the closing cash bank balance. Closing bank balance in debit side carried forward. It is overdraft. Closing bank overdraft is 9,700. Now look at credit side. Wages, salaries. It is both operating activity. Drawings, cash taken back by owner, financing activity. Mada Interiors, it is paid for furniture purchased, so it is it relates to investing activity. Cash outflow for investing activity. Rent due, then purchase of goods, again purchases. It is all from operating activity. Cash outflow through operating activity. Paid to Georgia Traders 20,000 again is for goods supplied, that is operating activity. Commission, we have to see further. Next is interest paid. Interest paid for the bank loan. It is payment for bank loan is financing activity. Drawings again is financing activity. Local taxes is operating activity. Closing cash balance carried down. Cash stand 27,950. Okay. Slide 8 gives some information relevant for preparation of cash flow statement. It is all on the errors corrected just before preparing final accounts and balance sheet of Sabu's firm for the month ending 31st January 2020. Rectifying entries are already passed and posted for it. We are reconsidering it here just for the following reason. Rectification of some of the items given necessitated changes in bank balance as per cash book. Such changes in bank balance are not there in the cash book which you have seen. It is there only in the extended cash book, which is shown in slide 9. Second is, some of the items require changes in the nature of activities. Something which is apparently cash flow from financing activity is really from operating activity or like that. The closing balance given in the extended cash book is to be taken as a closing balance for the purpose of cash book. Let us go to the items one by one. Interest credited in the passbook $400 not recorded in accounts. The rectifying entry passed and posted for it is bank account debtor to interest on bank account. So its posting comes in the debit side bank column of cash book, and this it affects the bank balance, it reduces the overdraft, and the interest on bank account should come as an inflow item from operations. Second is charges levied by bank for services related 3,200. The rectifying entry passed for it is bank charges account debtor to bank account. So posting comes on the credit side bank column of cash book. Bank charges is to be shown as an outflow item under operating activities. Because of the entry, bank balance, bank overdraft goes up. The third one is a sale for cash of old furniture and fittings, which was not included in calculating the opening entry, making the opening entry, for $12,000 is treated as sale of goods and credited in sales account. It was sale of old furniture, inherited furniture, but it was not shown as furniture and fittings in opening entry. Had been shown there for $12,000, then capital account would have gone up. The opening capital would have gone up by $12,000. It is now sold, and the proceeds of sale, $12,000, is credited in sales account. This cannot be credited in sales account, and so the correcting entry passed is sales account debtor to capital account. The posting reduces the collection from sales to the extent of $12,000. So out of the $78,000 collection from sales, this $12,000 should be subtracted. And further, this $12,000 should be taken as inflow from financial activities and should be because it makes addition to capital. Now next is sale of goods for $6,000 from Najib and Company is debited in cash book bank column, but collection is not so far materialized and found irrecoverable. This $6,000, which is shown as collection from sales, cash sales, in the cash book bank column, it has become irrecoverable and so to be written off, already written off as bad debts. The entry passed is bad debts account debtor to bank account, and posting is there in the extended cash column which you are going to see. So this $6,000 should be subtracted from collection from sales, $78,000. The last one is clearance from sale of old debt prior to inheritance to Gurumurthy, $3,000. It is debited in commission account. The old debt is not shown as liability in the opening entry. This was a debt due to Gurumurthy. It was a debt before inheritance, but it was not shown as a liability in the opening entry. As a result, but it is actually paid now. It is paid now. And the amount paid is debited in commission paid account. The rectifying entries passed is capital account debtor to commission paid account. So, commission paid account is no more there. We have seen an entry commission paid in the cash book already, but that is cancelled because of this entry. And therefore, in capital account, 3,000 should be subtracted. So this should be shown as a outflow item under financing activities. Okay. Slide 9 shows the extended cash book for recording the rectifying entries. It starts with the closing balances as per the cash book given in slide 7. Debit side cash balance 27,950 and credit side bank overdraft 9,700. Three rectifying entries affecting the bank balance are shown. In the debit side, interest on bank account not recorded in cash book 400. On the credit side, bank charges 3,200 and the collection from sales now found to be not collected and has become irrecoverable by bad debt of 6,000. The resulting closing balances are cash in hand 27,950 comes in the brought down to the debit side and bank overdraft 18,500 brought down to the credit side. Slide 10 shows inflows from operating activities. Collection from sales $78,000. Two items are to be deducted from that. $12,000 which is collection from sale of furniture and $6,000 which have become irrecoverable. As a result, collection from sales is $60,000. Now, receivables collected from Rollins $19,000 and from Miranda $21,500. That is total $40,500. Now, interest on bank account $400. The total collection from operating activities is 1,900,000. Outflows under head operating activities is given in slide 11. First is expenses and losses of operating nature. Wages paid, salaries paid, rent paid, taxes paid and bank charges. The total of that is $22,500. Next is payment done for cash purchases, $73,000, two items together. Now payments for credit purchases to Georgie traders, $20,000. The total collection from operating activities is 1,15,500. Net cash flow from operating activities, that is inflows minus outflows. Cash inflows total is 1,900,000. Cash outflows total is 1,15,500. As a result, net cash flow is negative 14,600. Inflows from financing activities, only two items. Additional capital introduced by Sabu $20,000 and realized from sale of old furniture inherited $12,000. Total is $32,000. Slide 14 shows outflows from financing activities. Drawings in cash 1,200 plus 5,000, $6,200. Interest on term loan from Azad Bank paid $2,250. And then payment to Gurumurthy, a creditor prior to inheritance, wrongly recorded as commission paid and then corrected, $3,000. Total is $11,450. A net cash flow from financing activities. Inflows $32,000, outflows $11,450. So net cash flow is positive $20,550. Net cash flow from investing activities. Inflows from investing activities nil. Outflow is the payment done to Mada Interiors for furniture purchase $14,500. So net cash flow is negative $14,500. All our preparations for doing the cash flow statement is over. Now we are doing cash flow statement for Sabu's firm for the month ending 31st January 2020. Operating activities, net cash from operating activities is negative 14,600. And from financing activities it is 20,550. It is not negative, positive. Now, from investing activities again negative cash flow $14,500. The resulting decrease in cash and cash equivalents during the month is $8,550. Opening cash was cash in hand 6,000, cash in bank 12,000, total 18,000. Because of this decrease in cash and cash equivalents flow, cash and cash equivalents at the end has come down to 9,450. That means cash in hand 27,950 minus bank overdraft 18,500. A cash flow statement can also be done in horizontal form as shown below. Opening balances, cash in hand, cash at bank comes in debit side, and then net cash flow from financing activities 20,550. It is positive cash flow, it comes in debit side. And from operating activities and investing activities, it is net cash is negative flow, so it comes on credit side. From operating activities 14,600 and investing activities 14,500. As a result, closing balance are cash in hand 27,950 and bank overdraft 18,500. Horizontal form is not as indicative or revealing as vertical form. Therefore, vertical form cash flow statement is more ideal. Slide 19 is the last slide in this lecture. Thank you for your attention and participation till the end. Please subscribe and share maximum. Hope that my classes are meaningful and sensible for you. If you have any other comments, please tell it frankly. Gross profit of the firm for the month of January 2020 is $72,100 and net profit is $34,226. Gross profit to sales is 37.51% and net profit to sales 17.81%. The firm has fairly high levels of profitability. But negative cash flow from operating activities of 14,600 is a sign of poor cash management, weak cash management, though 1 month is too short a duration of time to arrive at such conclusions. Additional capital 20,000 is brought in and there is inflow through sale of old furniture $12,000. The firm relies to a good extent on overdraft facility even while adequate cash balance is in hand. 2 suggestions can be given. 1. Should not rely on overdraft facility as far as the current payments can be settled with cash in hand. 2. More attention should be given on receivables management and prompt collection of receivables. Thank you.